Welcome to the Swing Trading with Cycles channel. We're going to do our update on gold and precious metals in general today. It's March 26, 2023. It's our weekend update. And as always, I start with thinking about the big picture. Think about the big picture, folks. Let's look at we'll look at the weekly chart for that. And remember, we have that September major bottom that is most likely your 8-year cycle low. Look at it on the weekly chart. This is a higher low, and this is also a higher low, but I mean, this is a nice clean uptrend, and not to get carried away with ourselves by any means, but you have to see in your mind's eye what is the chart kind of forming at this point. So you had this high 18-week rally. That's what that 18 means, right? So we rallied for 18 weeks, and then we had a decline into a low on week 22. And we since have rebounded pretty strongly. And so the presumption is we keep going higher. We're going to get another dip at some point, but then we go higher still. That's how an uptrend works, folks. Now, we only have to take this one trading day at a time, 1 week at a time, whatever you want to call it. Don't get carried away and try to plan for this thing. Just observe, are we remaining in an uptrend? And again, we're here on the weekly chart. So this would be week 3, right? Because this is your low here at 1804.78, and this was 1809. Yeah, that's right. And this must be the daily level. Right, that's the monthly. So important here. This is obviously, sorry, go back to that. I'll go back to that chart zoomed in. 22 weeks is actually kind of short for a weekly cycle, to be fair, but this is a very clear break below the 10-week moving average, which is this line here. Closed below it, and now we've surged above it here. And most importantly, the most important thing here is that we're above this high here. So this was our ICH on week 18, which we're above, and we even closed this week above it. This is all just consolidation at the upper end of this range. That's important. And so next week, because of this doji weekly candle, we're going to have an inside week opening, most likely. Unless we gap up, obviously that's possible. But those are the levels you want to be thinking about, because you'll end up with a candle, something like this, when it opens. I said when it opens. Obviously, it could break down, and so that would be a breakdown below 1934, or break up, and that's a move above 2009. And we're obviously closer to the 2009 level, but again, this is more doji-like than anything else. This is going to be week 4, so still relatively early in the weekly cycle. Think about the fact that this weekly cycle rallied for 18 weeks. Doesn't mean this one's going to rally for exactly 18 weeks, but it gives you just a bit of a sense. And so if we go, let's just zoom back out to the daily chart. If we think about where we are in a daily cycle, so we had this really long rally for 65 days, and then this decline that really only lasted like 18 days. Into this low on day 83. Then we had this move up that started the daily cycle advance, and we're like, okay. And then this sharp rejection in real time, it absolutely looked like this low was going to, this low was not going to hold. But of course, it ends up holding. It ended up holding, and not only did it hold, we had this furious rally. I mean, look at the reversal off of this level. So that's a low at, that's your low at, or that's a low at 1809.48, and this was a low at 1804. So it came within $5 of making a low. Close is an ugly, just shooter doji kind of like thing. And then the next day we make a higher high, close right at the 10-day moving average, and then up and away. So far the high has been day 14. That was on March 20th. Then we actually formed a swing high the next day. That's bearish, not good news. But now we've come back and we're back testing this high. So now, decision time. We talked about how next week is going to open as an inside week, but the daily candle is set to open inside the range of this daily candle, which is from Thursday. So if we look at it this way. So now we're going to see, like this is a way of just getting even more tactical, even more micro. We close near the lows of this candle on the Friday candle. So momentum wants to take us somewhere like here. But now it's going to be a question of, do we break down below 1964.74? So that gives you another near-term level that theoretically could hold as support, could be a zone where stops could be set. But the thing to keep in mind here, so Friday was day 18. Even if we are going to get a new high for the daily cycle above day 14, you're still going to eventually get a decline into a daily cycle low after that. So this is going to be a little bit of frustrating trading maybe for the next couple of weeks. So, but we'll have to see. There's no way, like, who knows? It could be a surge above the day 14 high. And then once you drop it down to a DCL, then it won't be as annoying if you've already rallied like 10%, let's say, above the high, which would be pretty aggressive. But let's just think about that. Like, daily cycle for gold tends to be around 30 days. This was obviously a monster daily cycle at 84 days. And that's why I say don't swear by cycle counts, cycle lengths, like how they usually are. That doesn't mean anything. Price can do whatever the hell it wants to do at any time, right? Like ultimately. So that gives us a potential low around sort of the middle of early to mid-April. So this is telling us like April 8th if it were exactly a 30-day cycle. So that gives us a good little approximation. And of course, the bearish case is that this was not a weekly cycle low and we're actually going to make a lower low at this point because we have made this higher high here. That seems incredibly unlikely. And most importantly, if we look at this monthly chart, just this is our 8-year cycle low here. This is our 8-year cycle low here, and with every move in price action, we're getting more and more confirmation here. This is becoming this red candle for February, which was pretty ugly. In real time, it was a bearish outside candle, to be clear. Made a higher high, then also made a lower low. We've just reversed that whole move. We've made a higher high above that. So this is now essentially just consolidation, right? Like, you think about it, like, it's just a healthy, like, again, in real time, not looking great. It's a bearish outside candle, but it ends up just being healthy a little. That's what happened, right? Like, that's your little high there. That becomes your lower high, or excuse me, your higher low. And now we've made a higher high above that, this high. That's incredibly bullish. And again, this would only be month 6. Think about the fact that the last 8-year cycle rallied for 56 months. The one before that, 35. The one before that, 100. The one before that, 35, 34, 41. All that to say, going back to like 1980, 8-year cycles have tended to rally for at least 30 to 35 months. That's like 3 years, right? Doesn't mean it's going to happen in a straight line. Again, obviously, there are going to be a lot of weekly cycle declines along the way, right? Like in this rally period, there were weekly cycle declines, right? Like in this rally period, there were weekly cycle declines, and there will be. That's unavoidable. What you want to watch for is if you can hold a higher low. Right, and so it's really simple, right? That's just the key. Like, you want to see this is your higher low so far. Then let's move on to silver, and we're also going to look at some ratios to get some clues here. So if you think about, so this is your monthly chart for silver. I know there's a lot of stuff on this. Yikes. That is your 8-year cycle low for gold. This is where, that's how it looked for silver, right there. And so the important piece here is that COVID actually caused silver to make a lower low than gold. Or I should say, make a lower low than the low that it set for the 8-year cycle low in gold. I'll just say that again, right? Like this low here for silver is coincides with the 8-year cycle low, because it makes sense. You're gonna expect silver to make a major bottom when gold does. The thing about silver's move is, I mean, look at this rally. It lasted for 1, 2, 3, 4, 5, 6, 7 months. And then we just meandered sideways for a really long time. And then made a lower low from COVID, just a panic move. You can see this big wick down below here. It did close above that low. That's important. That's significant on that monthly chart. And then, of course, we had our like 2020 post-COVID monster rally. And then this frustrating sideways consolidation, recent huge plunge into our September low, which again, this is the gold 8-year cycle low. And so again, this was your last gold 8-year cycle low. Didn't really do a whole lot, right? Like, I mean, so really the top of that cycle, well, technically was this, but it's a failed cycle as well because right? Like, so that's, I mean, it's a little bit of a mixed message, honestly. But then we have this plunge here, and now we're rallying out of this, right? So this is, and more specifically, tactically here, we're on pace for a bullish outside candle on the monthly chart because we've made a lower low below this candle, and now we've gone green and we're obviously moving higher and we're in a new daily cycle. And so as long as the daily cycle continues to advance, and we'll zoom into the daily chart, we're going to make a higher high above 24,628. 24 spot 628. Call it, we'll probably get to 25 is my guess, kind of like an overshoot. Now, it doesn't give us that many days to do that, right? But the important point here, though, is that that doesn't have to the pattern doesn't have to complete with this candle. We could just see a continuation in April. So something like that, imagine, right? Like, imagine we don't get much progress here. We can see the move get completed, but that is your target above this candle to continue the move higher, right? And then you have another candle, we're just advancing in a long-term cycle, eventually, obviously, to break out above these highs. So let's look at that daily chart. Let's look at where silver is in its daily cycle, similar to gold. So silver had a very long cycle, just like gold, day 79. And here we are on day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So Friday was day 10. And you can see the first obvious thing, if you remember the gold chart, it was a red day on Friday. And obviously it was not a red day for silver. Did have a major pullback, you can tell from this wick. But it's day 10 of a new daily cycle. And we're seeking out to break this high to really confirm. So again, that's that 24,628 level. That's that monthly pivot. It's all connected. That's why multiple time frame analysis is so incredibly important to understand. And if we think about the weekly cycle, this absolutely has all the hallmarks of an ICL. It's week 26, which is right around the timing band. We generally have them around week 27, 28. So that's like splitting hairs. And so big weekly swing low last week, or I should say the week of March 13th. And this week we had follow through. We made another higher high, held another higher low, closed like well above the 10-week moving average, which is starting to curl up a little bit here. So we are in week 2 of a new weekly cycle. That is bullish. And that actually is the same picture for the miners. Now, this thing could reverse at any point. That's always true. You have to be aware of that. It's a question of what is the likelihood, what are the odds, and also pretty clear, now we want to hold above the low of this week. So that's 22 spot 143. We really want to hold above that. That becomes a danger zone area if we're below that. And so if we look at, if we flip over to the miners, again, I say they have a very similar count to silver. So, similar to gold. Remember, gold, we thought it was going to make a lower low. It did not. The miners did. And so that is the same low that silver made. And so you could call that day 54 of a daily cycle. Of course, one interpretation is that this was your daily cycle low and this is already a fail. Now, given that we've broken out appreciably above this high, and we're actually now, we kind of filled this gap as well, that actually leans, see, you can see that gap just got filled. The gap between that. And it's day 11, so we're still relatively early, right? Like we could see a pullback here, especially as stretched as we are above the 10-day moving average. But you can see this rallied for 24 days. This rallied for 27. There's no reason why this couldn't rally for like 20, 25 days easily. And if we think about the weekly chart, it's the same picture as silver. It is week 2 of a new weekly cycle. You can see this is a little bit of a double bottom situation here on the weekly chart. That was a week 23 low. The last weekly cycle actually rallied for 17 weeks. Doesn't mean this thing has to rally for 17 weeks by any means, but that gives you a sort of a timing band almost, right? And Next week starts week 3. So it tells you that we could be a long way away from the end of this rally. I mean, even this bearish cycle rallied 12 weeks. So this is getting really interesting here in terms of the risk reward. And now let's look at some ratio charts. Actually, before we do that, really quickly, we'll look at the monthly chart here. And not the same pattern as silver because we did not make a lower low. It's actually just an inside monthly candle, but still seeking out this higher high to continue this pattern here. Again, major bottom in September, along with the 8-year cycle low in gold. And that was your 8-year cycle low for GDX. You can see, unlike silver, it did not make a lower low. It just kept rallying. So this is like your 8-year cycle advance for GDX. So let's look at some ratios. We'll look at the gold to silver ratio. You want to see that looking bearish, right? You want to see that moving lower. And that is exactly what we see. So in our last video, we talked about how this was our probable daily cycle high after a very long 57-day rally. And now we are getting that. So that's day 58, 59, 60. So day 67, the wrinkle here is that at some point this thing is going to print a DCL, which means it's going to rally, which means, again, this is the ratio of gold to silver, which means gold is going to outperform silver, which is generally bearish for the metals. But for now, we are moving lower. And most importantly, we're in weekly cycle decline most likely. So that DCL bounce is probably going to roll over early. So more specifically, look at this crazy furious rally for 11 weeks. And then you get this pause, this red candle, and then boom, last week we had the follow through. We closed below the low of the week before. And so this tells you we're very likely in weekly cycle decline. So you would expect something like, you know, as we said, some kind of daily cycle bounce like that, and then continue to move lower. More importantly, on that monthly chart, we had spotted a potential long-term top that's here, right? So like after rallying for 19 months, it looks like it's topping out and about to kind of roll over. Then we had this furious rally, and look at this monthly candle. I mean, in terms of a chart pattern looking bearish, that's actually pretty good. So you had this 19-month rally. Just to simplify, we've had this decline. Now we've got this move up, and this is looking like a bearish candle that's about to send us to a lower low, like that, something like that. Because this is what you would expect. Something like this if we're going to get a furious 8-year cycle rally out of gold. So that's the gold to silver ratio. GDX to gold, you want to see this looking bullish. And yes, this is on pace to make a bullish outside monthly candle. And if we look at the daily chart, yep, clear daily cycle low here. And rallies commencing, and also clearly it's also made a weekly cycle low. That's important. You want to see GDX outperforming GLD, the miners doing better than gold. And we also talked about how platinum bottoming was a important signal, and I posted about this on Twitter. But it does look like we have a weekly cycle low here for platinum at week 26, and these 3 weeks have just been consolidation. You would expect that it's going to break higher. And so, platinum also made an important low in September. It actually bottomed a little bit before, like a week or two before gold. So it was kind of a tell. You can see important bottom in September here and rally out of a long-term cycle low. So that is the update for the precious metals. If you zoom out, look at the longer-term charts, we just held a major higher low, and now we look to be rallying out of that. Very exciting stuff. We'll leave it at that. Thanks for watching.